The transformation that Morgan Stanley went through over the last 10 years is unbelievable. If you're new to this channel, please consider subscribing for one new video every day to help you become a better investor. Morgan Stanley is the third largest investment bank in the world after JPMorgan Chase and Goldman Sachs. It is the smallest of the big banks. The other big banks being JPMorgan Chase, Wells Fargo, Goldman Sachs, Citigroup and Bank of America. If you look at all the big banks, their types of operations that they are doing currently are very different from each other. And Morgan Stanley historically has always been an investment bank. The bank was founded in 1935 after the Glass-Steagall Act. So before the Glass-Steagall Act, there was the House of Morgan, which was one of the largest banks in the world and one of the most influential banks in history. So the House of Morgan had to be broken down. The Glass-Steagall Act was supposed to separate the commercial or retail banks from the investment banks, and that's how JP Morgan got separated from Morgan Stanley. Morgan Stanley was an investment bank, and at the time JP Morgan was a commercial, a retail bank. But eventually now even JP Morgan is an investment bank because in 2000 the Glass-Steagall Act was repealed. But that's for another day. If you want to learn more about JP Morgan and also about Morgan Stanley, I suggest that you read the book by Ron Chernow. It's called The House of Morgan. For today, let's see how Morgan Stanley makes money. How is it different from Goldman Sachs and from JPMorgan Chase? I already told you that the investment banking part of JPMorgan Chase is more focused on making deals, on mergers, these types of big deals. This is for JPMorgan Chase. While Goldman Sachs, they are more interested into IPOs and also they are interested into doing things like trading, market making. But as far as Morgan Stanley is concerned, most of their operations today is wealth management. This is 36% of their total revenues. So wealth management, you may ask me, is it investment banking? Actually, it's not. Wealth management is considered as a part of retail and commercial banking. Because if you look at JPMorgan Chase, the part that they are managing wealth, it's part of Chase, not JPMorgan, which is pure investment banking. So why is Morgan Stanley doing this? It's because since 2008, after the financial crisis, the bank has been taking less and less risk. Even Goldman Sachs, even JPMorgan Chase, all these banks, they have been taking less risk, and that's why you will see Goldman Sachs, they have partnered recently with Apple to launch the Apple credit card. So it's a way for them to enter retail market. The second largest revenue segment of Morgan Stanley is trading. That is 32% of their total revenues. So trading, it's just the thing that you used to do before the financial crisis. It's the same thing that most of these investment banks they do. They have these partners and these partners are going to trade for them. If you have watched the movie The Big Short, you will see that there was a partnership and it was part of Morgan Stanley. It was an independent partnership, but it had to report to Morgan Stanley. So when these partnerships make money, they make money, the revenues are accounted as revenues for Morgan Stanley. So they are a trading corporation. This is 32% of their total revenue. But now what about market making, which is 25% of the revenues of Goldman Sachs. For Morgan Stanley, it's 19% of the total revenue. 12% of their revenues come from commission and fees, 1% from long-term investments, and 18% come from investment banking. So investment banking, this is pure play investment banking. What I mean by this is that doing things like mergers, doing things like IPO, doing underwritings, this is pure investment banking. Now let's see the business segments of Morgan Stanley, because when we are talking about revenue segments and business segments, it's two different things. Because business segments, it's more about the corporate structure of the business itself, of the corporation, of the company itself. While revenue segments, it can be multiple things. When we are talking about fees, for example, it's the same thing from investment banking, and it's the same thing if they're doing retail banking. They can account all of these fees as one revenue segment. But in terms of business segments, Morgan Stanley has three main business segments. The largest one is institutional securities, which is 50% of their total revenues. So this is mainly market making and investment banking. Another business segment is wealth management. So this is the asset management part. They also have a brokerage firm, and they acquired this brokerage firm from Barney Smith, which was part of Salomon Brothers. So you can read all about this, how Salomon Brothers became Kimball and Smith, and it's a complicated history. But today, Morgan Stanley holds all these assets that used to be for Salomon Brothers in the past. The third business segment is investment management. So this is for more rich individuals. What changed during all these 10 years since the financial crisis to today with the business of Morgan Stanley? Like I told you, they went more into retails. And if you look at Goldman Sachs, it did not change that much. But now let's ask ourselves the question, if there is a financial crisis next month, what will happen to Morgan Stanley? What will happen to JPMorgan Chase? What will happen to Goldman Sachs? Which one of these banks is the best position to fight a financial crisis? JPMorgan Chase is the best. Because it's a big bank, it's not just about investment banking. So they have limited liabilities. The liabilities that they have, it's limited because of their massive business that they currently have. And Goldman Sachs, the bank will thrive in a recession, in a bear market, because of the amount of trading that they are doing. This bank, like I told you, they always make money when everybody else is losing money. But as far as Morgan Stanley is concerned, I fear for this bank if there is a recession or a financial crisis. Because if you look at how much of the loans are non-investment graded loans, it's 64% of their total loans, and about 30% is BBB rated loans. This is not a good thing. If you look at the Goldman Sachs, 51% of their loans is non-investment graded, and for JP Morgan it's 23%. So you see the risk that the Morgan Stanley has is pretty high, and because they do a lot of wealth management, when there will be a financial crisis or a bear market or even a recession, there will be less and less people putting money in the stock market, and their brokerage services, their brokerage firms is going to suffer. But to summarize, we can say that JP Morgan is an investment bank which always makes money. They like to find these big deals to make money. They like to find these big investments to make money. Goldman Sachs is more focused on making money when everybody else is losing money, while Morgan Stanley is more focused on making money when everybody is making money. So now you have to choose. If you want to invest in a bank which is going to grow in a bull market, Morgan Stanley is the best at the current price. Now if you want to invest in a bank as a sort of hedge for a bad time, Goldman Sachs is the best. And now if you want to invest in a bank which is good in the good times and good in the bad times also, JPMorgan Chase is the best. So in my opinion, JPMorgan Chase is the best of all the big banks. So let me know in the comments, what do you think about Morgan Stanley? Thank you for watching this video. Please like, subscribe and share. Subscribe for one new video every day about the stock market, about investing and about entrepreneurship to help you become a better investor. Have a nice day and goodbye.